Welcome to Inside India. I'm Amitabh Singh. These are your headlines. India's farmers could emerge as winners from Donald Trump's executive order to roll back tariffs on some food products. India's central bank announces relief measures for exporters in 20 sectors hit by US tariffs, including a moratorium on loan payments due between September 1st and December 31st this year. And Reliance Industries unveils plans for a new 1 gigawatt data center in Andhra Pradesh, following in the footsteps of Google's $15 billion commitment in the same South Indian state. All right, we're going to get started with a look at the Asian markets. It's the simmering tensions between Japan and China that we're watching out for, because that's seemingly impacting tourism stocks, and that's having an exacerbated effect on the larger space. You look at Nikkei, it's down 0.72%, and you look at the Hang Seng Index, down 0.6%, and the Shanghai Composite also down about 0.4%. Now, remember, this is happening right after Beijing has warned its citizens about travel and study plans in Japan. And we also have that sentiment, which is fading expectations around a US rate cut. Japan's indexes really affected, it appears, and US indexes had staged intraday recoveries last Friday after a tech-led slump rattled that sentiment. That might also be playing into the space right now. Take a look at the Kospi, though. It's doing reasonably well at 1.56%. It's up. And of course, you are also seeing some areas, some countries reflecting that positivity. But now let's give you a sense of the Indian markets. They come online in about 45 minutes. GIFT Nifty futures, we're watching that. The Nifty, remember, closed at 25,910. Threatening to go past that 26K resistance barrier. And as of now, GIFT Nifty indicating that that is indeed a possibility. What's on the mind of investors? Well, domestically, it could be improving earnings as Q2 results season has come along and gone, and perhaps a decisive thumping victory for Prime Minister Modi's alliance in that eastern state of Bihar. The all-time high, which is about 26,277, which it touched in September 2024, that's the question. Will it get there? Not sure. Will unemployment data expected later today also change sentiment? We're watching that and more. But let's now go across to what happened in the White House. The White House has rolled back tariffs on dozens of food products, including beef, banana, and coffee. Indian farm exporters are emerging as early winners of the decision, as it could revive some of the demand India lost when US duties on its tea, coffee, spices, and cashew nuts were doubled earlier this year. Export bodies estimate more than $2.5 billion worth of Indian shipments could indeed benefit. Our colleagues stateside asked the US Trade Representative, Ambassador Jamieson Greer, if the move's been made to address soaring grocery prices, affordability.
It depends what the importers do with the tariff. Our assessment, and frankly my experience as a trade attorney out in the private sector, is that when you impose a tariff, it ends up getting allocated along the supply chain. And the more foreign producers and suppliers you have, the more they eat that tariff because they want to compete to keep market share in the United States. If you're in a situation where you have a sole source provider overseas, then they're more likely to pass it along. I've been in contact with a lot of the U.S. companies that process or use things like coffee or cocoa or bananas or things like that. And they've said, listen, we've had some secular price increases over the past 2 years because of weather events in Brazil or other places like that. So when you look at the overall price trend, it hasn't been because of tariff. It's been because of these other events going on and just supply and demand. Now, if the tariff has been passed along to the consumer by these retailers, and a lot of them I think have withheld it, at least that's what they've told me, we expect that any price savings will go along to the consumer. I mean, that is the expectation. So we'll see what happens.
What was the rationale then for shifting the tariff prices for countries like Guatemala, for example, or some of the other countries where bananas and coffee and other things were coming in? I thought it was to make it more affordable for Americans, which to some degree is an acknowledgement that the tariffs raise prices on items like that.
Well, every trade deal has concessions on both sides, right? And so our concession to Ecuador and a lot of the other countries we're negotiating with right now, who are close to deals but not quite there, is to make sure that they can send us things that we can't make. It coincides with the concessions they're making to us to open their markets to American poultry, pork, beef, industrial goods, et cetera, our services companies. So this is part of the normal push and pull, but also coincides with the president's commitment in September that he was going to remove tariffs on some of these hard to find items, or items we can't grow in the U.S. just due to the climate. I mean, it's something he signaled for the past 2 months, and now we have a critical mass of agreements with countries who make this stuff. So this is good timing.
And like that truck that just passed him, we have the next story. India's central bank has rolled out a package of trade relief measures to help exporters hit by those U.S. tariffs. The RBI announcing a moratorium on all term loan repayments due between September 1st and December 31st, with interest charged only on a simple interest basis. Exporters in 20 affected sectors will be eligible. The RBI has also extended the deadline for repatriation of export earnings to 15 months from 9 months earlier, lengthened credit periods for export loans, and eased rules on shipment timelines. The measures, effective immediately, come as India's exports to the U.S. fell nearly 12% in September. The Washington has now said it is close to a broader economic deal with New Delhi. Also, one of the demands from the U.S. was for India to purchase more American energy, along with curbing Russian oil purchases. Now, Reuters is reporting that Indian state refiners have awarded their first joint long-term LPG import tenders to Chevron, Phillips 66 and Total Energies Trading, securing U.S. supplies for 2026. The refiners were seeking roughly 2 million tons of LPG. LPG, used widely as cooking fuel, is mainly imported by Indian Oil, Bharat Petroleum and Hindustan Petroleum, and sold to households at subsidized rates starting 2026. India plans to source around 10% of its LPG imports from the U.S., reducing dependence on Middle Eastern suppliers. And on the data front, India's wholesale inflation numbers hitting a 27-month low of negative 1.21% in October, driven by steep declines in food, fuel, and manufactured goods. Food prices saw the biggest drop, with vegetables down 35% and pulses plunging 16%. The government says the fall was expected after the GST cuts in late September. They pulled down overall prices. Manufactured goods inflation eased to about 1.54%, while fuel and power stayed in the negative territory. With both wholesale and retail inflation cooling sharply, hopes of an RBI rate cut in its December meeting are in fact building up. And to talk about that and more, we have Pranjal Bhandari. She is the chief India economist, strategist, and ASEAN economist at HSBC Global Investment Research. Pranjal, it's great to have you here in the studio once again. Thank you so much for coming on.
Lovely to be here.
Thank you. All right, I want to start with something you've spoken about in the recent past, which is the growth forecast of India, the GDP. You talked about it being 7%, which is on the high end amongst your peers. Give us a sense of why that's the case and what are the riders that it depends on.
Yeah, just next week we are going to get the September GDP data, and my sense is that's going to be close to about 7.5%. It's got a little bit of the GST cut boost, the fact that we announced it around the middle of August, although it was applicable only from 22nd September. But a lot of manufacturers started manufacturing very quickly, and that is something which our PMI monthly data has picked up. So I think the September data will be strong, and then when we move to the December GDP, I think that again will be very strong, because when we look at all the retail spending, retail demand in October, that's quite strong. So my sense is we're in a good way this calendar year, and my sense is over the next 2 quarters we'll probably see GDP growth between 7.5%.
Any riders that it depends on?
Okay, sure. There's always a rider out there. I think when we get to the March quarter, then things could soften a little bit. And the reason is that a lot of this consumer exuberance that we're seeing on the back of the GST rate cuts could subside by then, especially since the Diwali momentum is behind us. Yeah. And also the government finances. Tax revenues for the government haven't been good. If you do a GST cut, the consumer benefits, but the government has to pay a price because of lower tax revenues. And the government has also spent a lot upfront in this fiscal year. So there's a lot less spending room left for the March quarter. And my sense is for a government which wants to balance its budget, which is a good thing, they'll have to cut back on expenditure, and that will hurt growth a little bit. But, we can come to it. There can be offsets then as well. And one big offset would be if by then we have a US-India trade deal.
Yeah, I want to talk to you about that, because you just heard President Trump announcing just late Friday a particular relief. in domestic political concerns, it's basically about affordability and the pressure that's coming from the Democrats, right? But when it comes to India, it could actually benefit our farmers. Now, analysts are kind of divided around that. I just want to understand how much is really dependent on just the fact that this could impact farmers relative to what you're seeing in terms of domestic reforms. Because in your head, I know this for sure, that you put a lot of confidence in the government coming up with more domestic reforms.
Well, yes, I do. I do think that the US-India trade deal, we are sort of close to the finish line. Of course, all my views are based on what I read around me, and the general sense I get is that the bureaucrats have done their job, and a lot of the details have been thrashed out. For example, my sense is from news articles that India has opened up its non-food agricultural sector to US imports, and we can see in the data that the purchase of Russian oil has fallen dramatically from about 30% in the start of the year to about 5% in November so far.
And likely to fall more, yeah.
Yeah, and I think all of this gives a signal that the negotiations are in a very advanced state, and I think at this point it's up to the two leaders to sort of thrash out the final results. I want to just say one thing quickly and connect this back to markets. I think markets in a way have partly priced in tariffs falling from 50% to close to about 25%. Yeah. So for markets to really positively react, my sense is we'll have to see a tariff rate which is closer to about 15 to 20%. But we'll see when that happens. Of course, there's no final date in our mind.
I just want to ask you this because is there anything that makes you think, well, all this optimism, positivity that we're hearing President Trump saying in the White House, we're pretty close to a deal. This has been said before. Is there anything that gives you pause when it comes to the fact that, hey, this may not even happen?
Well, that's always there, right? Because we've seen that in many countries that, things go up and down and there are dramatic shifts completely unexpected. So, there's always like room for a big surprise out there. But I would say compared to the last couple of months, I think in terms of the bureaucrats negotiating a trade deal, we are the closest we've been in the past.
Okay. I want to get your thoughts on another thing. Will there really be any material impact from what we are seeing that's coming in from the White House, this particular, announcement by President Trump? Do you see effectively that India's farmers will be better off, let's say?
Yes, for sure. As in, if you take away the large tariffs from a big agricultural sector, that will sort of, give a boost to India's exports of those sectors to the US. So on the margin, yes, this is positive. It's positive for farmers, which is a relatively vulnerable class. So I think it's generally positive. But I'm going to keep my eye on the real trade deal happening at this point of time, because I think that will have a much broader coverage. For example, it will also include textiles, gems and jewelry, many other manufacturers and exporters in India.
Yeah, and in the same way, we have seen that the Indian government has also decided to provide relief to US tariff-rate exporters from India. How much will that cost the government? Because you are concerned about the cost of the government at this point in time. We've had the Bihar elections. I'll come to that in a bit. And what does that mean for the fiscal math then?
Mm-hmm. Yeah, that's a good one. I think on its own, it doesn't derail the fiscal math, because there's a short-term price of about 0.1% of GDP, which I think is easily met. And then there's sort of another longer term, another 1.1% of GDP. So overall, it's not very expensive. Mm-hmm. But I think there are other issues on the fiscal front. And I think the big one is that tax revenues have been a bit disappointing this year. Some of it is GST tax revenues because we've cut rates, but some of it is also income tax because we've cut rates there as well. If you recall, in February, there was a big tax cut, and corporate tax collections haven't been very good so far either. So all of this means that tax revenues have not been that great. On the other hand, spending has been very good. This government in the first half of the year has done a 40% year-on-year increase in central government capex, capital expenditure. So you've done a lot of front loading, so there would be some need to cut back in the final quarter.
I don't want to say that you're in the room when it comes to the government making a decision, but you're definitely outside the room giving them advice, because you're an advisor to the 16th Finance Commission also. Now, what is your sense of what reforms India could actually bring that could catalyze the Indian equity market? Because you've spoken about this in the past, and you've indicated that there will be more reforms. It's not just this. Yes, they may be at a lower level, but there will certainly be more reforms, because if the tariffs particularly don't come through, the tariff deal, the trade deal, then you'll need local domestic reforms, and you think they're going to come.
is one particular reform which I think people are not focused on, which I'm excited about.
Okay.
And I think the recently concluded Bihar elections also give me a sense of it. I think some of the laggard states in India, like Bihar, UP, which have generally been the low growth states, the poorer states, have started to grow a lot more faster than they have ever in the past. In fact, I would argue they are growing faster than many of the advanced states of India in the last couple of years. And when I look back into what's really driving it, my sense is it is the fact that they're doing a lot of infrastructure spend now that they were not doing in the past. And I would argue that you saw something of that in the Bihar election results as well, that a lot of the infra spend has been strong and the voters are seeing that on the ground. If these states continue to grow and they have a space for growth for a long time because they have a huge amount of catch up to do, that can be a source of national GDP growth. So we need to have this going. How can the government do it? I think the central government is giving a lot of capex loans, infrastructure loans to the states to encourage them to do these projects. I think that is something that should continue. In fact, if I were to tell one thing to the finance minister before the budget, I think it's that. The capex loans that you're giving to the states, make them even more, give them swiftly.
The underperforming states.
No, it goes to all states, but it also goes to the underperforming states.
Okay. Well, in this context, obviously, both Uttar Pradesh, India's largest state for our viewers, and of course, Bihar, India's poorest state, which just went through an election, they have been actually doing well. But you're saying they need to be given even more money, and so that particular growth story continues, and that could have a larger impact on the GDP.
Sure, as in, they have a lot of infrastructure catch-up to do to make funds available so that catch-up can actually happen. I think is a great idea.
Okay, I just want to quickly understand something about the Bihar election. It's a critical election. The political ramifications or implications could have been that if that state was lost by Prime Minister Modi's party, the center could see some alliance, argy-bargy, let's put it that way. So in that context, there's a question around the political welfareism, economic political welfareism in Indian elections that is perhaps impacting the global growth or India's growth through the eyes of particularly FIIs, right? One of the primary reasons this election is being said has been won by Prime Minister Modi's party and alliance is because of 10,000 rupees being given to the women. You have more than 12 million women who were given 10,000 rupees and more was promised. How do you view this trend of welfareism?
There's probably a very complex question, which will probably take a couple of hours, but let me try to summarize it as much as I can.
Yeah.
Look, my sense is that as long as it's efficient subsidies, I think it's all right. I think when we try to get into product subsidies, trying to get like rice and wheat to people, we can also distort markets. But as long as it's cash subsidies, I think it's more efficient. And then there is a lot of work around the world which has shown the efficiency of this. Again, so that's good. But are you being able to afford what you're doing? Are you giving the subsidies and actually cutting back on other expenditure like infrastructure? If the answer to that is yes, then it's a problem. Okay. But I think on its own, I think cash subsidies is a very efficient form of subsidies.
Okay, interesting. Where does the money come from?
Well, taxpayers' money, so there's a bit of redistribution.
Yeah.
And then there is, borrowing in the markets. And to that, you have to always know your limits, because if you borrow too much, then all your bond yields go up and that derails your finances. So you have to be very careful. You have limited room and you have to divide it up very carefully between current expenditure, which is subsidies, and capex.
So it's possible. Quickly, because we're completely out of time, does the RBI cut rates in December, and by how much? If a trade deal happens, and if it doesn't happen by then?
Wow, it's a very complex and it's a very close call this time.
Yeah.
I think the RBI has space for a lot of easing over the next year. I think inflation is generally low. But RBI doesn't need to just cut rates. It can also do a lot of regulatory easing. I do think rate cuts are there. December is a close call. For me right now, I'm going with a 25 basis points rate cut because we had a remarkably low inflation number just last week. So on the back of that, it's a good opportunity to cut.
Yeah.
But if it doesn't cut, I won't be surprised. I think the rate cut will happen in the next policy meeting.
All right. Pranjal Bhandari, thanks so much for joining us. It's always a pleasure talking to you. Thank you so much.
Thank you for having me.
Right. Now, India has put new data privacy rules into effect, forcing companies like Meta, Google, and OpenAI to limit how much personal data they collect and give users more control over their information. Remember, this is an 8-year-long battle. The rules, which are similar to Europe's GDPR privacy law, require firms to collect only data needed for a clear purpose and explain why they are taking it, allow users to opt out and notify them of any breaches. With nearly 1 billion internet users, India is a major market for AI platforms like ChatGPT and Gemini. Companies and organizations violating the rules will face penalties, and the government has given an 18-month window to companies for transition. And you'll want to stick with us on Inside India today. We have some conversations with 2 top business leaders later this hour. We will hear from market debutant Pine Labs after its shares surged on the first day of trade. Plus, a key voice on the tariffs facing India, the CFO of All Cargo, joins us for an exclusive interview. That's all coming up when Inside India returns in a bit. Welcome back. Now, on the trade front, we're looking at the latest in the US-China deal. We're waiting to see if China makes changes to its rare earths export controls, with the US Treasury Secretary Scott Bessent saying in an interview on Sunday that a rare earths deal would be completed by Thanksgiving next week. Meanwhile, the latest US Department of Agricultural data out over the weekend showed that China bought only 2 shipments of US soybeans since the Trump-Xi meeting in South Korea at the end of last month. Now, agriculture purchases were touted as a key outcome from the meeting, but the 332,000 metric tons shipped falls well short of the promise by China to buy 12 million metric tons by January. And while it looks like the US-China tensions have been cooling a bit, Alibaba has pushed back against the reports of a White House memo claiming it is providing support for Chinese military operations against targets in the US. CNBC's Elaine Yu has the details. Elaine?
Hey, Amitosh. So Alibaba's AI ambitions are back in the spotlight. It's revamping its AI model, but now also with this FT report saying that the White House is claiming that Alibaba is supplying the PLA with capabilities that the White House believes is a threat to American security. Now, the FT said it cannot verify these claims independently, and Alibaba has now come out to say the assertions in the article are completely false, and it used very strong language as well, saying it's a malicious PR operation that clearly came from a quote, a rogue voice looking to undermine Trump's recent trade deal with China. And indeed, the memo that the White House published shared with the FT is dated November 1, just a day after Trump and Xi met. Now, Alibaba's shares fell after the report, and that really shows investors are still quite jittery about any possible new sanctions on China's AI industry. But I was also speaking with Brookings fellow Kyle Chan about this, and he highlighted some important context here as well, noting that Qwen LLMs, which are the large language model families that is released by Alibaba Cloud, saying it has growing popularity around the world, including in Silicon Valley. And this is coming as we see fears about a potential AI bubble and potentially these U.S. companies being overvalued, especially when you have these advanced and crucially free AI models coming out of China that poses a threat to the pay-to-use business models of OpenAI and Anthropic and the likes of that. Now, this White House memo sparks different sets of concerns about U.S. national security, but that will feed into the U.S.-China tech rivalry as well. But it's also worth noting that Alibaba is now revamping its AI main app, trying to gradually include agentic features into its consumer-facing apps as well. So we see, the U.S.-China tech rivalry heating up, including on the agent front. Amitash.
Well, we were really waiting for this because it was always about the devil in the details, and now we know some of them. Thanks so much for that, Elaine. Before we head to a break, we're going to take a look at Bitcoin. Bitcoin really slumping over the weekend. Oh, that's a big one. Take a look at that from Friday to Sunday. It has slumped. It's at 95,443 at this point in time. It was trading over the past 24 hours below 94,000. Remember, this is the lowest point since May 6th, based on data from TradingView. And we do know that part of this negative sentiment is really about what President Trump has said. He did say that the $2,000 tariff-funded dividend payments to U.S. citizens would require congressional approval. This coming actually from U.S. Treasury Secretary Scott Bessent. He said this on Sunday, that perhaps leading to that particular dive on Sunday, but it appears right now that people are buying the dip, going back up about 95,439. Ether is also down. XRP is also down. It's a big sell-off across really the entire cryptocurrency market. But coming up, Pine Labs, the Indian company, jumps nearly 28% on its market debut, shrugging off valuation concerns in India's red-hot IPO market. We'll hear from Pine Labs' CEO, Amrish Rao, on the company's post-IPO business plans right after this break. Welcome back. This is Inside India. We're counting down to the market open in India. This is how we are shaping up at this point in time. Well, Nifty 50 closing on Friday at 25,910. GIFT Nifty futures indicating that 26,000 resistance barrier is going to be broken. Interestingly, also remember that this is now going to be perhaps the 6-day running that Nifty 50 has been climbing. The US dollar to the Indian rupee, that relationship remaining in a bit of an area of concern. Whether the RBI continues to intervene will be a question. How much of an impact the tariffs really have will also be something we're watching out for. But let's just continue to look at the fact that it's a 6-day running potentially today that we will see Nifty 50 staying in the positive. The reason we say this is because a part of that perhaps had something to do with Pine Labs, because Pine Labs made a strong market debut on Friday with its valuation soaring to nearly $4 billion. The stock rose as much as 28% from its issue price of 221 Indian rupees. The $440 million IPO issue shares at a valuation of $2.9 billion. That is below the $5 billion it secured from its last private funding round in 2022. Backed by Peak, 15 partners, Temasek, PayPal, and MasterCard, Pine Labs operates across India's digital payments ecosystem, offering point-of-sale terminals and competing with players such as Paytm and Walmart-owned PhonePe. Amrish Rao, he is the CEO of Pine Labs, and he is joining us now. We do appreciate that, Amrish. It's a pleasure to be speaking to you. Thanks so much for coming on CNBC.
Thank you for inviting me here.
All right. The first question has to be about what happened in the market, right? Soaring trading debut on Friday. Congratulations. This after you tweaked your own valuation by about 35 to 40% from the private valuation of about $5 billion way back in 2022. Now, what have you learned about the Indian investor in this time that we clearly didn't get?
Great question. Look, the top 5 banks in India trust us. The top 5 e-commerce companies use our platform. The top 5 retailers have Pine Labs across all their stores. There's a general goodwill about Pine Labs. If you actually go to Bangalore, go to Delhi, speak to anybody in the startup world, they'll have good things to say about Pine Labs. When we wanted to actually go out in the market, one thing which was very clear to me and also to our board was that we didn't want to go out alone. We wanted to go out with a price point where we believe that the community would be excited, everybody would be able to join into our IPO. And we did take that into consideration when we priced our product. Now, day one listing, where it goes, really was outside our hands. We did not focus on that one. I'm glad that the day turned out the way it was.
All right. I want to ask you about valuations, but first I want to understand the vision for Pine Labs. What's the next North Star for you? Remember, we have to talk about this in the context of India's fintech space, which has been the darling of the world, and it's evolving rapidly. What's the next IPO-like moment for both the fintech space in India and for you?
So look, let me clarify on one important point. Almost 15% of our revenues comes out of global markets. About 85% is coming out of India. And generally, we have been able to show strong compounding growth as far as revenues are concerned. And we've improved our EBITDA, where from a single-digit number, now we are getting to almost 20% as far as EBITDA is concerned. One of the areas where we feel that we have an opportunity is really taking fintech and taking it global. So over the last 3-4 years, we've actually invested into taking our platforms outside of the country. We built a partnership with Emirates NBD in Dubai. We've got a long-term relationship with CIMB in Malaysia. We just signed up GCash in Philippines. And as we speak, we are ready to do a launch in the Singaporean markets. Now, what's the learning? The learning is India was ahead when it comes to fintech, faster payments which are going to be API first, online, the whole bill payments infrastructure, real-time payments. I think all of those learnings we can export it and take it to other markets. We have almost about 400 people based outside of the country and building out infrastructure in those markets. I think as an Indian, if I go and tell someone that, hey, look, we can master AI, I think it's going to take me many hours to convince somebody. But coming from fintech and saying, we think we have a fintech product which can sit into your requirements, people do believe us. People want to experiment with us. And that's something which I'm super excited about. So continue to compound in India, but at the same time, open up new markets, make investments in new markets.
Okay, and about that, the India fintech story, briefly.
On the India fintech story, look, we largely are seeing three major trends, and we want to capture all those three major trends. One, omni payments is becoming extremely critical. So you're getting to see even smart D2C new companies starting off online, wanting to go offline, want to deliver similar experience both in an offline and online world. So that's something that we do want to capture. As you know, we are the market leaders in offline, but we are making very good progress in the online space. The second part, which is very interesting, is India has actually created the digital highways, and it's almost being presented to us founders. Now, when it comes to the entire bill payments infrastructure or the account aggregator, where consumer data can move very easily from one location to another, we are investing heavily into that. So that's the second area, which is of very high interest to us. And third is purely around consumption. We are getting to see a lot of installment-based payments happening at the point of purchase. We are again market leaders there. We want to enhance our capabilities both online and offline when it comes to consumption space.
All right, I just want to double click right now on your past a little bit, and we'll come to the future once again. What will keep you profitable? Because, you know, just before the IPO, you turned profitable. Now, what will keep you profitable in the long term? And how do you really address concerns around cash burn in the past really continuing?
Let me give you specific numbers. So FY24, we were at about 150 crore as far as adjusted EBITDA was concerned. Coming into FY25, that became almost about 355 crores. And just in the first quarter of this year, we delivered about 120 crores of adjusted EBITDA. What I'm trying to really highlight out here is there's a clear trend as far as adjusted EBITDA is concerned. Now, what happens between adjusted EBITDA and PAT is largely what we have around ESOP costs, which, as you know, is a non-cash line item. And then there is depreciation and amortization largely related to acquisitions. The way I see this is we have a clear trend of adjusted EBITDA. If that trend on adjusted EBITDA continues to go forward, I see no reason that the PAT number will ever go reverse. I do believe we'll be able to continue with this trend that we have shown over the last 3 years.
Right. You know, there is a lot of positivity. Pine Labs is the first firm to secure the RBI's license to operate as a payment aggregator across offline, online, and now cross-border payments. This news emerging just as the listing was around the corner last Friday. What's the vision for cross-border, and what are the remaining challenges?
Let me give you one example. We just partnered with UOB in Singapore, where if you're a UOB consumer and if you go across the straits to Johor and make a purchase at a Pine Labs terminal, you can actually convert that transaction into installment payments. So we actually starting to do installment payments on a cross-border format. I think this is the first anywhere in the world that we've actually done. Now, that's got nothing to do with the RBI license. But having said that, we think there's an opportunity when it comes to Indian traders selling globally and reverse, and that's an opportunity to capture. One thing about us and the Reserve Bank of India is we continue to be super compliant. We have never been hauled up by the Reserve Bank of India. And that's in a way getting reflected in our financials also, because we've been a steady compounding company, being able to capture that to the EBITDA line. And that's where we want to remain as we continue to build this. So we want to be a good compounding story.
Right. You know, the climate is right now deregulation, but we've seen how dynamic this is, particularly in the fintech space. My question, and perhaps the question of anyone observing Pine Labs, has been that, hey, it's looking good, but what if regulation changes later? And the second question in the same vein is that there are questions around dependency around just a few single clients, over dependency. How do you address that? Are those legitimate concerns?
So we make money from three segments. We make money from merchants, where they pay us almost 45% of our revenues. About 35% of the revenues comes from banks, financial institutions, and then others come from corporates, where we do a lot of fintech-like services for corporates. We have a fairly diversified revenue stream today. And there, as I told you, we've got, the who's who of the market. Now, the big positive with the who's who is we are so embedded into most of these banks and retailers. I just don't see a reason for them to want a way out of Pine Labs as long as we continue to innovate and deliver value to them. As far as regulation is concerned, look, when you're dealing with banks and financial institutions and dealing with money, regulations and regulator can be your friend. And if you can operate in an environment where you take the best of innovation, continue to be the most compliant organization, I think you'll turn out okay. And that's really been the story for many years for us.
All right. I wanted to ask you for a Bollywood-style trailer of how you plan to use the money that you've got from the IPOs. But I'm going to have to ask you a slightly different question, which is that that money has come in, and you have in the past tried to expand, and you just said that 15% of your business is really outside India. But it's also been a challenge, making sure that that is as effective as you've planned for. Like, for example, with MasterCard, right? That investment came in and you wanted to use that to kind of go abroad in different nations. That wasn't as easy as you had imagined it. And now the question is that how will that focus on growing your business in a diverse way not be the same kind of challenge? What's going to be different this time?
See, the way I'm going to say this is, I think the takeoff was slow, but now, as I tell you, we've got 20 airlines globally, which is our partner. Woolworths in Australia, which is one of the biggest retailers in Australia, is completely with us as far as platforms are concerned. Even in Singapore, we've got CapitaLand with us. We've got IKEA in about 5 countries. I believe now we have a position where we've actually established ourselves and nobody is asking the question which says, who's this new company coming out of India and trying to go global? We are getting called for all large tenders and RFPs. It's now for us to really invest as far as local platforms are concerned and also local sales capabilities. We've got about 5 people now in the US. We just won some big contracts with petroleum companies in the US also. So I think to your question, apna time aa gaya hai.
I don't need to translate that for everyone. It's our time now, and it has come. That's what he's saying. It's a famous, song, dialogue, I don't know, from a Bollywood movie, and I'm glad you brought that up. Thanks so much for that. That's Amrish Rao from Pine Labs. Much appreciated. All right, before we talk about the markets, there are some other updates. At least as many as 9 people were killed and 27 injured after a stockpile of confiscated explosives accidentally detonated at a police station in Indian Kashmir. Police said the blast happened while officers, government staff, and forensic experts were examining the materials. The incident comes just 4 days after a deadly car explosion in New Delhi killed 8 people. And India's National Investigation Agency has arrested a Kashmir resident linked to the New Delhi car blast. The NIA alleges Amir Rashid Ali conspired with the alleged suicide bomber and helped buy the car used as an improvised explosive device. The blast near Delhi's Red Fort was the city's first major explosion since 2011, and the government has vowed swift action. We're counting down to the market open in Mumbai. We're back in 2. All right, welcome back. The Indian markets are open. The Nifty 50, will it hit the 25,000? Well, 26,000 really, that's the hope. It's looking positive at this point in time. That's what GIFT Nifty Futures indicated. The optimism coming from that continued hope that the tariffs on India will finally be reduced. And of course, several other indicators domestically, a good inflation data, wholesale and retail, and at the same time, a domestic win in a state election for Prime Minister Modi and his alliance. That's keeping the Nifty 50 sentiment positive. The US dollar to the Indian rupee, the dollar getting more strong, the rupee weakening, and that's a concern. Will the RBI intervene as it has in the recent past? That's the big question. We'll be watching that once again. A lot could change. there's a lot going on. And for that, let's just look at some of the movers in the Indian markets. Reliance Industries is planning to build a 1 gigawatt AI data center in India's Andhra Pradesh. This announcement comes shortly after Google unveiled similar commitments, a $15 billion 5-year investment to build its own AI data center. Now, Andhra Pradesh's Chief Minister Chandrababu Naidu did not disclose the size of Reliance's investment, but said the new facility will operate alongside the company's gigawatt-scale AI data center in Jamnagar, Gujarat, creating one of Asia's strongest AI infrastructure networks. The shares of Reliance, slightly down, slightly muted, but there's a long way to go. Never know what's going to happen. A quick check also on shares of Tata Motors, passenger vehicles, reacting to the earnings report card released late Friday. The automaker cutting its fiscal 26 operating margins for Jaguar Land Rover cars to 0 to 2%. That follows a cyber attack which disrupted production in September for 5 weeks, forcing a near $230 million one-time charge, while soft demand in China and chip shortages also weighing on the outlook. Wholesale volumes excluding China fell 24%, while falling luxury tax changes and ongoing China weakness added further pressure on the automaker. Tata's passenger vehicle unit reported a 22-fold quarterly profit surge thanks to the 826 billion rupee demerger gain. But excluding that, it posted a 6.37 billion rupee loss. The stock started trading after demerging from Tata's commercial vehicle units just last week, and it's slightly down, 0.98% down. But, well, again, it's early times for them. Staying with earnings, take a look at shares of All Cargo Logistics, the company reporting a loss of 40 million rupees in Q2 compared with a profit of 170 million a year ago. Revenues, however, were up over 12% in Q2 to around 5.4 billion rupees. The logistics firm recently restructured, merging all domestic operations into a single entity and separating international operations into All Cargo Global. The company says the move is aimed at streamlining operations and boosting efficiency. Ravi Jakar is the group CFO and Director of Strategy at All Cargo Group. Ravi, thanks so much for joining us. Much appreciated.
It's a pleasure.
All right. Now, you may be among the best to speak about the impact on demand and supply chains from these 50% tariffs overhang that India is facing. We'll talk about your company in just a bit, but for the moment, can you be the expert on this, on supply chains? Can you anecdotally just explain what happened when the news came in and what's happening now with India and its supply chain?
Yeah, so I think, not just India, but globally, the whole tariff announcements, have been creating a lot of volatility in the international trade. We have seen, Asia to US outbound trade jump up at times, and then it kind of slows down. That volatility started sometime in April, and it continues till today. On the India side, it has impacted some of these sectors deeply with trade to US going down. But what I personally believe is, I believe that India and US both have long-term interests aligned. And whatever I read into the news headlines from the last couple of weeks, it seems that both have the right intent in place. We both want to make things work. And in my sense, over the next coming few weeks, we should possibly see some positive momentum. And I think sometimes the good things are the ones which take time, and hopefully a good trade deal outcome should be there from the ongoing conversations. For the time being, the trade is disrupted, particularly some of the high value commodities, which, of course, we do not deal much with on the logistics side, such as, the diamond industry and a few other industries are impacted deeply. In the short term, this pain should continue for another couple of months. But like I said, I personally remain hopeful that the India-US trade deal should happen eventually, and that should normalize the things. Globally as well, I think it's not just about India. There has been a lot of back and forth negotiations between US and the key exporting markets, primarily out of Asia. And that has led to a bit of an uncertainty which may persist for the next quarter or 2 quarters. And the Asia to the US trade may only see stability, maybe possibly post the next Chinese New Year. That's the kind of perspective I have on the impact of tariffs. Yeah.
Right. Just give us a sense, because it's difficult to paint a picture, like what happened in your office, what happened in your room, right, when the news of the 50% tariffs came. But I want to ask you, how does a company like yours really factor in these negotiations? Information is not coming, easily between India and the US around that, which appear to be getting better than they were. Mr. Trump, in the White House last week saying we are pretty close to a deal, but materially nothing coming out. So how dynamic does a company have to be?
Yeah, so I think, in our context, we have to plan for various trade lanes. And it did appear that India to US outbound trade would go down, and it did happen that way. But at the same time, if you see not just our company numbers, but even the macroeconomic numbers, India has done well. Our exports to other markets have risen sharply. And that's something which we saw internally as well, with our India-US trade lane performing weakly, but then the other trades outbound from India, largely compensating for that. But where I see the impact is, on the global basis, we have seen an extremely muted trade performance. This is usually the time, July to September quarter, when you find volumes really growing north. There's almost like an 8 to 10% increment in the volumes, which happened last year as well. But this time that has not happened. There's clearly, timid demand into the holiday season. And we have seen that the recent current months have not seen the uptick which we are used to over the years. So naturally, the tariff has an overbearing impact on the global trade. India, to an extent, like I said, did compensate with the other trade lanes, but imports into Europe as well as the overall global trade volumes do remain subdued, unlike the yesterday's holiday seasons.
All right, but if I'm correct, I heard you kind of indicating that there has been compensation from some other markets. Are you beginning to see any material impact from the UK-India trade deal and the others that are in the works between India and, let's say, the EU, the New Zealand region, and Australia, and more?
Yeah, I think, specific trade deals typically are multi-year programs. And, I don't think that they would have an immediate impact in that sense. It typically starts from a couple of quarters, and then, some of these concessions only become effective 12 months or 18 months or even longer. But in general, there's been, a continued momentum, I would say, not just for a couple of quarters, but last few years, more and more companies have been looking at, importing from India. And that's kind of created, a stable supply out of India. And across industries, we have seen that the trade outbound from India is our fastest growing trade globally. And that is a reflection on the overall manufacturing industry and also the overall goods exports from India.
All right. A loss of about 40 million rupees in your company's, earnings that we saw. And we'll bring up the stock price right now, because as the markets have opened, it looks good for you. It's up about 4%. But I want to talk about that loss of about 40 million rupees compared to a net profit of 170 million in the previous quarter. How much of that is because of FX exposure, demand volatility due to tariffs, etc.? And you've also demerged.
Yeah, so actually I was coming to that. These numbers are not the right indicators to look at. Year-on-year comparisons would not make sense, because the business as it exists today is very different from what it was last year. Our business restructuring is now complete. Effective 1st of November, the international supply chain business got demerged into All Cargo Global, which is in the process of getting listed and is going through the process. What you see today as All Cargo Logistics is basically a culmination of our restructuring with all our businesses, the Gati Express supply chain, All Cargo Gati, All Cargo supply chain. All of that has folded into All Cargo Logistics, and now it is our integrated, comprehensive domestic logistics business. There are also certain technicalities around in terms of, while the international business got demerged, the timelines for merger were different at each step. And as an outcome of that, the financial narrative may not be very clear. So let me, remove the noise from the numbers and share with you that on the operating business performance, and we have shared that in our investor presentation disclosures as well, after many quarters of losses on the domestic business, we have now actually turned profitable. And we have achieved this on the back of three key initiatives. One is the revenue expansion. We have seen revenue grow almost 10% sequentially quarter on quarter. And so if you see, just to say the numbers, our EBITDA has actually grown by more than 20%. And taking off the one-off amortization and the scheme-related expenses, you've actually moved from a loss to a profit of, almost, so it appears to be an 18 crore loss for the quarter, but in reality, it is a 9 crore profit, adjusting for these, one-off items.
Right, no doubts about that, and congratulations on that result. But briefly, because we're completely out of time, my understanding is that your international revenue stream was about 90% of your total revenue, and domestic was about 15%. Can you correct me on that?
So on the international business, you are correct. About 85% of the revenue is international, 15 is domestic. But all cargo logistics that you see today is entirely domestic business, which has now crossed a 2,000 crore annualized run rate as well.
All right. Thanks so much, Ravi. We'd love to have asked you what kind of impact this demerger will have on the domestic market. But since you've got positivity going there, profitability, we'll have to really come back to you and discuss this at length later. Thanks so much for joining us, Ravi Jakar from All Cargo Group. That's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next.